So gentlemen, thank you so much for joining me here today for this interview. Of course, we are discussing Q4 2009. Can I have your thoughts, gentlemen, on where you think the stock market will be heading in this final quarter?
Well, for me, I think we are probably close to a top, as I said, certainly an intermediate top. And I don't think we will see the market more than 20, 30 points higher for the rest of the year. And I think there's probably a little bit more downside than upside from here. But having said that, there are still quite a number of sectors and stocks that we like, probably among the mid-caps, more so than the large caps, which we think on balance is more expensive now.
Okay, and what about you, Jerry?
Well, since we emerged from the terminal fall that we were in October last year, I think Asian markets generally are up about 79% against Wall Street's rise of some 17%. And I think just recently there have been signs that maybe we might slow down and that US might do some catch-up. So I really have no idea where we're going, but I think we might, over the long term, continue to see this gradual decoupling. First time round, when the US fell and everybody thought that Asia would decouple, that didn't happen. On the contrary, we all went in the same direction. This time, I think Asia, when the dust settles and people look at value and growth, they have to invest in Asia generally. And Malaysia is a relatively small part of that growth, but it certainly looks attractive. In terms of growth, in terms of valuation, there isn't that much upside. So we'll have to find something new to drive us higher, I think.
Do you have any predictions for the kind of level we'll be looking at?
No, I don't have any. I really wouldn't like to predict.
Okay. Andrew?
I think if you're looking at just for the end of this year, we are probably going to possibly hit about 1,002, and that's about it. But beyond that, I think if we see, I think we will see more signs of recovery next year, and we could hit higher, perhaps another 60, 80 points higher into 2010. I think the growth, the recovery will gather momentum over time, but certainly the market, for the index and the index stocks, a lot of that has been priced in. So we have to probably dig deeper into the less well-known stocks.
Okay, let's touch on those sectors then that you were mentioning just now. I'm sure you have sectors that you like and those that you're less favorable about for the end of the year. Could you let me know, maybe Jerry, what kind of sectors you are in for and those that you're not?
Well, I ought to point out that my company's investment process involves visiting as many companies as we can, and no matter what the sector is, there are some that are run well and there's some that are not run well, and our role is, we hope, to try and find out those companies in each sector that is run well. Having said that, I think in Malaysia and other parts of ASEAN actually, our portfolios tend to be biased towards domestic demand and domestic economies. Banks, insurers, retailers, that's where I think there could be the growth. Insurance and I would say some of the banks which have been hit quite hard because people anticipate their non-performing loans getting worse and larger provisioning. I think that might turn out not to be so bad by the time we get to the end of this year.
Okay, so more in the financial sector for you?
Yes.
Okay, and those that you don't like?
Companies that are not very well run, companies where the management doesn't keep the shareholders abreast of what's going on and suddenly ask their shareholders for a massively, heavily discounted rights issue. I think those companies are the ones that go down. That might be in the airline sector right the way through to banks. I wouldn't have any particular bias towards the sector.
So more on governance?
Yes.
Andrew, you have a different opinion?
I agree a lot with what Jerry says. For me, the sectors that I like for the next 3 months and for the next year is really dependent on, falls out from the view of our economy. We think that there will be a very long period of low interest rates, and from there we think that property developers, which have already done well in the stock market, will continue to do very well. And also consumption eventually will pick up. consumption, if you look at the official GDP numbers, is still quite weak, but we think that over the next 12 months it will pick up quite strongly. So out of that, it's companies, property stocks like, for example, Sunrise, Sun City, their current sales haven't done quite as well as the others perhaps, but I think over the next 12 months, both of them plan to be launching somewhere like $1 billion or over $1 billion in terms of development sales. And both of them are still trading at a significant discount to our RNAVs. So we like property developers like that. Beyond that, in terms of consumption, we like companies like Genting Malaysia, like Media Prima, and to some degree also we also like not directly in consumption like Malaysia Airports. So directly or indirectly, these are the sort of consumer stocks we do like. We think over the next 12 months, I think the consumer hasn't been very badly hit in this so-called recession, and once I think employment prospects are more secure, I think the spending will come back.
And what about the sectors that you're not so favorable about?
We don't like the airlines. We think that the price cutting will continue to hurt them, will continue, and also the fuel prices are very volatile and looking like on the way up. It's not going to be positive for them. The other sector that we are fairly negative on overall is the oil and gas sector. We think that oil prices on balance probably has downside. Most of the oil majors have cut down on capex, and so that will hurt the oil and gas supply companies. The only ones among the oil and gas companies, the only ones which will probably do reasonably well are those who have direct exposure from contracts from Petronas. But those who are less exposed to that and supply to or have oil majors as their customers are probably going to do less well.
Okay. Suhaimi, do you have any opinion on sectors that you think will be doing well and not so well in the fourth quarter?
Well, coming from the same research house as Andrew, I guess our view is essentially in line.
Okay. Jerry, just now you were giving a little smile about something Andrew said. Is there anything you'd like to add to what he had to say?
Well, no, I just, Maybank Securities doesn't like the airline sector. I expect whenever they visit Singapore, they'll all be hopping on the bus, be full of Maybank stuff. But that's one thing that I think maybe people have got wrong, and that is that the non-performing loans might pick up quite severely, that there might have to be larger provisioning. I don't think that's so, and I think in Malaysia, particularly in micro-lending, Malaysians like to pay their personal loans, and there's nothing they hate more than a debt collector coming to their place of work saying, you owe us money. It drops their water face, or whatever you call it here. So, you know, there are companies, I think, like Aeon Credit Service, small micro-lenders that look very cheap and are priced to see a big rise in NPLs that I don't think will happen.
Okay, now let's take a look at corporate earnings. Now we saw the corporate earnings in third quarter, some of them not as good as expected. What do you expect for earnings in fourth quarter?
Overall, I think certainly for our stock universe, most of the stocks that have reported have actually done better than we've expected, and I think in the fourth quarter we will see that trend continue. Essentially a recovery in earnings, and I think that is partly driven not just a recovery in earnings, but a recovery in earnings that is, I think, better than what the market is expecting, and that will, I think, will continue to drive stock prices.